Welcome to the India Today Group studios here at Delhi, where we are decoding the post-budget fine print with the budget makers, and with me right now Dr. TV Somanathan, Finance Secretary, and Tuhin Pandey, the Secretary of Disinvestment. Thank you very much for joining us. Dr. Somanathan, I'll come to that one big thing. In all of the interim budget formulation, was the biggest consideration that this budget should in no ways be inflationary and therefore keep the overall fiscal management and hopefully the monetary side on track?
That was one of the considerations. I mean, the government has put a lot of emphasis on control of inflation in many ways, but I wouldn't say that was the primary emphasis of the budget. I think inflation control was one among many goals that we tried to achieve. But yes, a disciplined fiscal policy helps in controlling inflation, no doubt.
And therefore, the primary focus, different observers have interpreted in different ways. In your words, what was the primary focus?
I think you have to see this as a step in the journey towards a developed India. That's the primary focus. Now, that is a long journey, but in a long journey, you have to start by doing the right things. So, we have tried to make sure that we've set a good foundation for getting us through to 2047 on that long journey, and such long journeys require good fundamentals. So, good macroeconomic fundamentals are very important if we are to run this marathon. If it were a sprint, you can do something, but a marathon requires that your fundamentals be kept continuously good. That's why we've attempted to have a fiscal policy which on the one hand consolidates borrowing so that we move to a level where there's more room for the private sector to invest. At the same time, we have kept our own investments up with a substantial increase in capital expenditure so that growth continues to be high.
One of the things that the post-budget commentary is saying, and they're saying that at the end of this financial year, the 5.8 number may actually be even bettered. Would you share that optimism?
I don't share that optimism, and I'll say why. I think a lot of people are making, at least I saw a couple of commentators make an observation that the net to center growth in taxes is smaller than the 14% that was seen in the first 9 months, and therefore there is some room for it to improve beyond the revised estimates. I think what is being missed here, what we have assumed in our revised estimates for the current year is that tax revenue will grow at 12.5% after refunds.
But and refunds are much faster.
Refunds are faster. So 12.5% after refunds. Then we have the devolution to the states, and then you get the net that we get. The composition of the taxes is complicated. There are some taxes which are shareable and some which are not. Many are shareable, some are not. This year, the tax which has declined, probably the only tax which has declined rather than grown, is excise on petrol and diesel, and that is largely non-shareable. So the decline is entirely on the central account, while the rise has been in the shareable taxes. So the growth of devolution has been faster than the rate of growth of taxes. So devolution to states is growing at 16.5%, as a result of which our net tax is only growing at 10.8 or 11%. So actually our numbers are realistic. I don't expect any bonanza. They are slightly conservative, but there is no bonanza waiting for us at the end of the year.
Credible and conservative is the leitmotif of budget making in the Modi government. And one of the points that you added with regard to states, I'm sure along with what you have, just this important detail that you provided, the fact that interest-free loans have also been extended for one more year. How has the performance been so far, and was that the reason you were?
Performance has been very good. We anticipate that about 1.05 lakh crores will be utilized this year. This is a combination of the unconditional and the conditional parts. It has had an important effect in incentivizing states to improve capital expenditure, because even for the unconditional part, we have one basic requirement that it must be incremental.
Absolutely.
We do not allow states to substitute this for their own capital expenditure. They have to keep going whatever capital expenditure they were doing, however high or low it may be, and this has to be used as an increment. That means they are incentivized to at least maintain their own capital expenditure and then use all of this for capex, which is why you've seen a substantial growth in capital expenditure of states this year.
Absolutely, and away from the headlines, viewers sometimes, and all the politics around center-state relations, this is granular detail where actually a new deal with states is being worked out, and once the 16th Finance Commission report recommendations are implemented in the future, we'll be able to talk more about that. Mr. I come back to you. My line for the disinvestment part of it is the return of disinvestment, but not this year. You have postponed it by a year and put a substantial number. Why is that, and is that on account of one or two big asset sales that you have in mind? What is the broader direction and strategy there, sir?
See, first of all, I think you will notice that, we are not disinvestment department. We are investment in public asset management.
Absolutely.
One of the important philosophies of the government has been, wider wealth distribution, that the government has wealth, and then you sell the shares, you list the companies, bring those shares to the market, and then, by that, you distribute wealth, allow the people to make a return. So that's very important. I think this part was, we have realized that we need to do a lot more, and we have really succeeded in creating that wealth, which I think the people had been looking for. Just to give you an example, 3 years back, as on 1st of January 21, we have got 61 listed companies, and we have got 16 public sector banks, listed banks, as well as public sector insurance companies. Now, and as on 1st of January 2021, the combined market cap of their shares was about 15 lakh crore. And 3 years down the line, it's now 58 lakh crore. Can you imagine the wealth which has been created? And we are only quibbling upon some disinvestment number, because the point is that the money is to be made money, unless you create wealth. Why did we actually list the company? Why did we do the shares? Unless the people made money on that. In one single year, our market cap has increased by 25 lakh crore.
Absolutely, and the PSU banking cap has shown a wonderful turnaround.
Therefore, I mean, if you allow me to just make this thing for 4 or 5 strands of this new paradigm. One is that, we create wealth, which means that the underlying assets have to perform well. The banks have to perform well, the CPSEs, public sector enterprises have to perform well. They have to grow. And look at the capex, they would be contributing something like 3.5, 3.2 to 3.5 lakh crore this year as capex from their own resources, contributing to the growth of the enterprise. The third is that, consistent dividend policy. All the CPSEs have been constantly sharing, making profits, constantly giving the dividend. You look at all indicators, they are improving, whether it's return on capital employed, return on equity, asset turnover ratio. And, the market is realized. And finally, we have calibrated the disinvestment and dividend strategy looking at together. Absolutely. Because if you part with the shares, we will never get the dividend, which is the return on income. So it's like, if you have wealth,
you're looking at lifetime return rather than one time.
So if you have wealth, how do you manage your wealth? So why you should be expecting the government also to do the same thing, which we are doing. So if we have created a wealth of 42 lakh crore in 3 years, that is what Dipam is.
And this is a question that was asked, that given the extraordinary holding, majority holding that the government has in public sector banks and the fantastic turnaround due to the governance reform and other reforms in the banking sector, would it not have made sense to sort of offload a bit more, do follow-on offers?
See, calibrated disinvestment strategy is a part of that strategy.
Okay.
I mean, if you are doing value unlocking, obviously you would rather be patient and do it rather than doing it. Meanwhile, if you just look at it together, we have already done about 54,000 crore. But you aren't really looking at dividend. You are not looking at, you're looking at only a segment. The question is, when we look at it, we look at dividend. We look at the
point taken, and last year at the same venue.
We also look at the capex, because capex story, the growth story, I think the public sector also has a role to play. So I think what we have to do is to calibrate the strategy and not to really sort of do a single line approach, but where our investors, their returns are maximized, and we bother about our minority shareholders.
Okay, we are at the end of our time, but one last 30-second intervention. Explain the broader direction in terms of the borrowing. The net borrowing figure has enthused the markets. Is this likely to remain in July, or will we see some new calculation in July?
I don't expect, we have presented to you the estimates for the full year. we take appropriations for a part of the year, but this is a reflection of what we intend to do in the coming year. So I don't see any, I mean, barring some event which I am not aware of, this is a serious estimation exercise, and this is what we intend to follow through on.
One quick point, the funding for Manrega and some of the other social sector. Can you just quickly wrap it up for us? What's been
the budget estimate this year is about 40+% higher than last year. It's gone up from 60,000 to 86,000, which is the same as the revised estimate for the current year. The other provisions are all higher than last year, and we continue to be, fully committed to funding all the centrally sponsored schemes in the areas of health, education, and in health there are lots of new schemes. We have the Ayushman Bharat scheme, which is expanding its base to ASHA workers and Anganwadi workers. We continue to construct new medical colleges, AIIMS, IITs, IISCs. A lot of these projects are underway, and we'll continue to fund them.
Absolutely, and that big dividend number that Mr. Tuhin Pandey was talking about, dividend from RBI, from banks, PSUs seen at 1.5 trillion rupees. So not taking away from that point, but hopefully the project and likelihood of follow-on offers in banks may be taken up at some point in the future. Mr. Pandey, can we expect that?
I mean, what I'm saying is that is something which we should never disclose actually to the TV studio.
Absolutely, but for all the disclosure and the details in the budget, full marks to the budget makers. We've just had Finance Secretary and Dipam Secretary here with us. More will join us, but I'm going to thank them at this stage, and you, the viewer, will be back with more. Until then, goodbye.